Good evening, everyone. Time for another silver update. This is the 5-minute chart of the US dollar Japanese yen. Now, we had a news article on Zero Hedge about a supposed flash crash in the dollar. You can see here that it was primarily the dollar yen, as I've explained before in many other videos. The US dollar index is a basket. It's made up primarily of the Japanese yen and the euro, but it's a basket. So if you look at the currencies that the dollar has crossed on its index, this is one of the biggest ones. Now, you can see the volume that came in here. It's enormous. But if we pull out to the long-term perspective, say the daily chart, we can see here that the Japanese yen has been in a tremendous bear market against the dollar. And today's move, you can see, is just a tiny move. So let's go out to the weekly so you can get the real long-term picture. So the recent strength in the dollar versus the Japanese yen has been one of the ways that the politicians, the manipulators, the powers that be have made the U.S. look stronger than it really is. And this video is going to be called Lamppost Lotto, Pitchfork Poker, and Rope Roulette, because what I'm going to try to show you here is that the whole idea of the term that we often hear, kicking the can down the road. American politicians for the longest time have been involved in a game of kicking the can down the road. But we know that when the truth comes out, and the truth is going to come out, I think we're approaching that point. And I'm going to show you with the figures on the spending that when the truth comes out, there are going to be pitchforks and there are going to be cries for rope, and there are going to be cries for them swinging from the lamppost. Now, don't get me wrong, I don't support any of this, and one of the reasons why I try to warn people on a continual basis is that when this fails, and this thing is going to fail, and when it fails, it's going to be the most catastrophic failure in the history of the world. Now, unfortunately, the politicians in the United States have been doing exactly the opposite of what they should be doing, which is encouraging self-reliance. What the politicians in the United States have been doing for the last 50 years at least, maybe 60, has been encouraging reliance upon the government. That's ultimately going to end in failure, and I'm going to show you that with the numbers. But let's go over and take a look at the cross rate on the Chinese currency, because as I said before, when we first had this rally in the dollar against the Chinese currency, that this was going to be a very short-lived rally. Now, you can see the trend line. The trend line is very clear. It is of a decline in the dollar. Now, you can see that it has corrected up, but again, this trend is down. I don't have any doubt that the Chinese currency and the US dollar are going to 1-to-1 and beyond. So I have never believed in this rally. I don't think it has any legs. Let's go over to the silver chart. Now, we had an interesting rally in silver today, and we had this failure of what I had termed a flag formation, and we need to pull out a little bit farther here. Let's go to the 2-hour. So this flag formation, you can see, has now corrected back to a base. It was a perfect rising market that we had in the period of time that it took off from. You can see that it was a very strong flag formation. It built a pennant and broke out. It built another one and it broke out. And then with the Fed intervention, Yellen manipulation, they managed to correct and basically destroy the rally. So the big question is going to be where we go from here. Now, I've said before that I thought the final test would be a test all the way down to $15. Now, I don't know if that is possible. It is theoretically possible, but the question you have to ask yourself is if they actually make a correction down to this level, which is going to be actually before the Bear Stearns top, which really marked the beginning of the financial crisis. This Bear Stearns top, where we hit $21 in silver, and we had then Bear Stearns getting vaporized. And if you remember, Bear Stearns was the major short in silver, and then the real estate, they had a couple of hedge funds that went bust, and that took all of Bear Stearns down, and the Fed got involved, and they had a secret weekend meeting and all that stuff, and then they crashed the price of silver. That was the beginning of everything, was right here. Now, we've already taken out that number, and that seems to be a number that we're fighting to get back up above. But this number back in 2006 is a much lower number. I have serious doubts as to whether we can get down to that number, but it is possible. Now, a lot of people have speculated about what would happen if we got down to that number of 14 or 15. I think that it's absurd that we would think that any miners could survive that type of situation, because I believe the replacement cost for silver, the cost of mining, is somewhere up around 30. Others have speculated it's around 20. But I think even the skeptics would agree that at $15, it's not possible for any primary silver miners to survive. And again, let me remind you, the brilliant point that Jeff Nielsen has pointed out many times is that the designation of whether some company is a primary silver miner has nothing to do with whether or not that company has decided to do this or that. It's strictly a function of the price. And once the price of silver falls low enough, then the mine that was a primary silver mine is no longer a primary silver mine, because you have to remember that all these metals come together. Now, it's not universal for every mine. Some miners have more aluminum or zinc. Some mines have more gold and silver, etc. But basically, when you see primary silver miner companies become companies of base metals, that tells you that the price of silver is so low that it's not profitable for it to be a primary silver mine anymore, and the bulk of their profits come from the base metals. So I have serious doubts as to whether any of these companies can withstand a $15 price of a correction back down to that point. That doesn't mean we won't get it, but I believe at that point we would see probably some serious fireworks. So before we get to the main topic, let's go over to gold and see how this movement affected gold. So you can see with the volume chart, it's fairly significant that the rally in gold was very strong at about 8 a.m. We'll pull out to the 1 hour to see how much of the downtrend was retraced. If we draw a line from the top here down to, say, these levels here, it seems to be a reversal of that trend. But then again, we have this baseline breakout here of that type of flag formation. So that seems to be possibly a trend direction change. We won't know until we see what happens. Now, I wanted to take you over to the main story of the night. And again, we're talking about this issue of the politicians kicking the can down the road. Now, we know that no politician wants to be in office when the system collapses. Because if you listen to Dave of the X22 report and we cover that every day on our blog. I'm very impressed with Dave. He does a wonderful analysis of the news. Plus, he has a theme that he is constantly beating the drum of, and if he's wrong, then he's going to end up being wrong. But the theme is that the politicians in America have to create some type of distraction that they will use to collapse the system, because the system is broken and bankrupt. Now, the reason why I'm calling it lamppost lottery or pitchfork poker, etc., is because it's my belief that when the American people find out, and I believe it's just a matter of time for the American people to find out, that all of the money they believe they have for their retirements and everything else for their future has already been stolen, they are going to call for pitchforks, lamps, and ropes for these politicians. And I think these politicians know this. And if you look at past crises, we had the 2008 financial crisis. We had people like Bernie Madoff and some of these others, Stanford, etc., who are kind of token fall guys. We also had WorldCom with Bernie Ebbers. We had Enron with Ken Lay, etc. So somebody has to take the fall. And the bigger the crisis, the bigger the collapse, the more people and the more important people that have to take the fall. So that's why they're playing these games. Now, I wanted to show you how bad the numbers are. This is from CNS News. This is the alternative news media. The mainstream media is just simply not going to report these facts. But let's look at this, because I've covered some of this already, but we want to look at how bad these numbers are. Americans got $2 trillion in benefits from the federal government in 2013. The federal government paid $2.007 trillion in benefits and entitlements in fiscal year 2013 from government programs, according to the data from the Bureau of the Fiscal Services Monthly Treasury Statement. The Treasury Statement summarizes the financial activities of the federal government, including data on government receipts, outlays, and surpluses and deficit totals. The September 2013 monthly Treasury Statement calculates these metrics for the entire fiscal year of 2013, which began October 1st, 2012, and ended on September 30th, 2013. So let me say, first of all, this is dated, and I can guarantee you that it is worse. It is not better. According to the statement, the federal government total outlays, otherwise known as spending for means-tested and non-means-tested, these are two categories, means-tested and non-means-tested government programs, not including administrative expenses, totaled $2.007 trillion in fiscal 2013. And you can see here, if we click on the image, it's not the best image, but you can see here we have Social Security, railroad retirement, veterans compensation, unemployment, workers' compensation, veterans educational assistance, and Medicare. That's the total non-means-tested government programs. Then under means-tested government programs, we have public subsidized rental housing, federal SSI, SNAP, temporary assistance, WIC, Pell Grants, children's nutrition. You can see that we got 1.399 and 608. So the total is about $2 trillion. Now let's take you over to the national debt clock. So you can see here on the national debt clock, the tax revenue is $2.9 trillion. Now, as I pointed out in the last video, the cost of government workers, those figures that we just gave you were not the cost of government workers were not included in that. Remember, it said administrative expenses are not included. So we know we're taking in about $2.9 trillion, assuming that's a true number, and I don't have any qualms about thinking that that may be fake. But let's just take it at face value and say that's true. We know we've already eaten up $2 trillion of that. Now, we haven't included the federal employees. So if we did 4 million federal employees at $50,000, then we're talking $200 billion, but it's probably closer to $80,000 or $100,000 when we total it up, and we're talking anywhere from $300 to $500 billion. So we add that to our $2 trillion, and we're now at about $2.5 trillion of the $2.9 trillion that is a transfer payment. In other words, this money that is coming in as tax revenue is being transferred to another citizen for them to live on that money. This is not money that is paid to support any of the infrastructure of the government. This is just money that is transferred from one person to another. We know with the baby boomers, we know with all these unfunded liabilities that things are only going to get worse and at a rapidly accelerating pace. So we're now up to 2.5 trillion. Now, I wanted to show you an article here on these state employees, because the first thing that came to my mind was that these state employees are not state funded. And so I wanted to verify that, and this was the article I came up when I searched for it. This is just going to be anecdotal, so I can't verify the value of these figures, but here's an example. Okay, this was the federal shutdown that occurred in 2013, and you can see here the headline: state workers in North Carolina feel effect of federal shutdown. Okay, well, how's that the case? Raleigh, the federal government shutdown caused the furlough of hundreds of state government workers whose jobs are fully or partially funded Tuesday, and state officials said several thousand more jobs could be affected. The State Department of Health and Human Services told 337 employees not to show up for work Wednesday. Officials said as many as 4,500, now this is one state, 4,500 DHHS workers could be furloughed or see their hours reduced. So we know from this article that that is true in every state, and we now know we have to add in not just these federal workers, but also a percentage of these state workers. How large is that number? I don't know. One of the estimates I used for the federal workers was that it was roughly $400 billion. We know that we have roughly $2 trillion plus going to the transfer payments without including these federal employees. If we include just 20% of these state employees, that gives us another $400 billion, which brings us to 2.8. So it's my contention that we are already past, well, we're way past the point of no return, but we're actually to the point where every single penny of revenue that the federal government brings in is actually spent on the income of a person who lives off the government. And that, my friends, is complete bankruptcy. That's the end of the game. That's when there are so many people riding in the cart that the people that are pulling the cart run out of gas and the cart simply stops. We, in my opinion, are approaching that point. We are approaching the point of lamppost lotto, of this poker where the politicians finally end up in a situation where they are going to get the blame for this system collapsing. Now, when this system collapses, there are going to be people out rioting in the streets. I don't think there's any doubt that the reason why the federal government is preparing for riots in the streets is that they expect riots in the streets. And I think that the people who are going to be rioting in the streets are the people who have taken the handout, become dependent upon the federal government, and then those benefits are either reduced or cut off completely. In a situation where we have rising prices, that's going to be a very, very dire situation. I think the powers that be know that. They certainly don't want to be hanging from lampposts. They don't want to be strung up with rope. They don't want to be held accountable and put on trial. But the bottom line is this, that at some point, the system is going to collapse. And those who are in power are going to be held accountable. It might not be person A or person B, but the people are going to demand that somebody be held accountable for the disappearance and vaporization of their entire life savings and their future. And when that happens, you're going to see a sudden and catastrophic change in the system. And that is the reason why you hold physical precious metals, not because the price has performed, because the fact of the matter is that the price now for silver, even though it has made this breakout, and this is something that we documented, it is correcting back down to the trend line. You don't hold physical silver and physical gold for a number of paper dollars you can sell it for right now. You hold physical silver and physical gold because you know that the system that we have is doomed. It is destined to collapse. When it collapses, we're going to have a lot of catastrophic events, and you do not want to be one of the people who is dependent on the government when the government announces that all the promises are broken. And we'll talk to you next time.